Alright guys, welcome to another one of my videos, MagnOpus Trading Solutions. In this video, I'm going to show you guys how to incorporate a trading strategy. You can build one yourself, but I'm going to show you guys my trading strategy and how to use it and read it using MagnOpus Trading Grid on the MagnOpus Trading template, and how to read price action in regards to a trading strategy. And I'm going to show you guys how we're going to plug it all in. First, let's talk about and look at my trading strategy that I use personally. um, Unlike these other guys, I'm not gonna gatekeep the strategy. It's not like if you use my strategy, it's going to, like other people say, oh, it's gonna diminish the odds of the strategy and the markets are efficient and it's gonna and not work. No, 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 no. What they do is what they do. First of all, I am a technical analyst and I am an aspiring, consistently profitable professional trader. And it did not matter whatever the markets do. I have to adapt. If I do something the markets adapt, I'm gonna adapt as well. But I don't believe that this type of strategy is going to be taken out because it's not based off of BS like these other guys be doing, or it's not based off of algorithmic trading and what do you call that? High frequency trading. Those are the types of edges that are taken out by the markets. Regular trading based off of how markets actually move, I don't think is going to be affected. Um, and um, based off of how I trade, and the theories and the basis of what I'm doing is based on how markets move. And markets only can do two things: move up and down. I don't care if it's in consolidation, bullish or bearish. They say three moves because I guess sideways is a move for people, which is theoretically not a move. But yeah, it doesn't matter what markets are doing or want to do or decide to do or update. This should technically work. If I'm wrong in the future, um, I don't think I'll be wrong in the future because I'm ever evolving the strategy and I'm ever always making it better. And as technology advances, I will advance with technology. So don't worry about that. And I'm not afraid to show you guys my strategy. You guys can take it, run with it, do whatever you want with it. It's up to you guys. If you want to show love and show me appreciation that you're grateful for it, okay, cool. If not, I'm not gonna cry. I'm blessed and highly favored. And I did make this video before, but I didn't record it. I love you guys and I love the work. I love the charts and I love trading because I'm recording it again. It's gonna be another hour long of me yapping. So buckle up, take notes, take a screenshot if you want, and let's go into it. All right, guys. So I only trade USD for the time being. The time frame that we're going to be using is going to be the 5 minute charts. Put 15-minute charts because I don't want you guys to see me in the future using the 15-minute charts and say, yeah, yeah, I only use the 5 minute charts. First, it doesn't matter what time frame you want. Markets are fractal. It's all the same exact thing. And since I use points and ranges, it doesn't matter what type of candlesticks is happening. The exact point that it happened at, the exact range that is happening within is going to be the same on all time frames. But we're looking at 15 minutes. It's more visually appealing for me, and so on and so forth, especially when building a strategy, right? So that's beyond the point. But for now, just think about the 5 minute on Euro USD. I'm on New York time zone, Eastern Standard Time, and I use TradingView as my website. So yes, the next thing or the first actual thing that we do in the morning is since I wake up actually at 4 a.m. in the morning. I do workouts. I have routines and stuff like that, and I usually be at work around at like on before at like 8 whatever. But talk about strategy. First thing you want to do, you want to open forexfactory.com/calendar. You can go and get the app yourself, and then you're going to check if there's going to be either high impact news or no news days, bank holidays, right? Which is going to be the red folder or the red folder or the gray folder. I'm going to show you guys that now. Usually it goes straight to Forex Factory. So Forex Factory, for the last 3 days, we haven't had any news, but Thursday we have high impact news at 3:15, not gonna be there. 3:30, not gonna be there. 8:15, that's gonna be 15 minutes after I start trading. So this is gonna affect my trade. This would affect the trade. This would affect the trade. I don't really think this is gonna affect the trade because I'm usually in trades for about an hour or less. But let's explain that once again. We do not trade technical analysis, which is candlesticks and candlestick patterns, trend lines, Fibonacci's, or whatever. We do not go on charts to look if it's going to be a buy or sell. We have no bias in the market. We let the markets tell us what it wants to do, and we do not use news to make any trading decision. We use news to tell us when there will be liquidity or movement in the markets or volume in the markets. That's the only thing we use news for. Maybe in the future I'm gonna use news to figure out when not to trade NFP, CPI, and PPI news, or maybe I don't. But that's besides the point. What we do is there. If you look, I'm gonna try to have to drag this box over here a little bit. Yeah, so you guys can see it a lot better. All right. So there's this little green thing right here in the top right corner. You only have you. I only have, but you can do whatever you want to do. I only click for the red folder and the gray folder. I unclick all these other pairs and only leave Euro USD. That's the only information I want. I don't want to distract myself with any information that I do not need. So once I take a quick look at news, I'm like, oh, news is gonna come at 8:15. When 8:15 comes, I would like to see how price moves within that time and 8:30, 8:45, right? If it moves, sometimes it moves, sometimes it doesn't. Sometimes it's high impact news and it don't do anything. So it's just a good piece of information to know. And that's it. And then we go back to the strat and we'll talk about it more. So once we have checked news, oh, let me actually add something. For you, you need a time that you wake up every day for sure. You need to have an alarm on your phone at 7 o'clock, 7:30, 7:45, 7:50, 7:55. I would say not 7:55, 7:58, and at 8 a.m. Those are the alarms that you need on your phone. You have a real life. Real life stuff is going to be happening in your life. You might use the bathroom. You might have to take a number two. You might have to take a shower. You might be eating breakfast. You might have a phone call. Your mom might call you. Things might happen, but you need to be rock solid focused where nobody could touch you. Nobody could talk to you. Nobody could do anything to you between the times of 7:50 and 8:05. That's 15 minutes. So you need 15 minutes where you lock yourself in the closet, lock yourself in a room so that you could go ahead and execute this trade. And then you can manage your trade whenever you want to manage your trade. You want to have you want to have I'll say 7:30 to 9:30 is a good time where you don't need a lot of stuff happening. This is where you can be in the trade, manage your trades, close the trades, and that's it. As well as journal and do whatever you need to do. So we're gonna wait for the 8 a.m. candle open on the 5 minute charts, right? We're gonna wait for 8 a.m. to happen, and then if looking at the candlestick, it's gonna let us know what is the open price of that Japanese candlestick. Once you figure out the 8 a.m. candle open price, you quickly have to place a buy stop and a sell stop. You're gonna place a buy stop 5 pips above, and you're gonna place a sell stop 5 pips below the 8 a.m. candle open price. So you're gonna take the 8 a.m. candle open price, you're gonna add 0.000305. That is the representation of 5 pips on the Euro USD chart. It is expressed to the thousandth decimal place, which is no 10 decimal place on the chart. So 0.005 you're gonna add to the 8 a.m. candle open price, whatever price it is, and that's gonna give you the entry. That's gonna give you the entry for your buy stop. You're gonna go on MT5 or MT4, whichever one you're gonna use. You're gonna click pending order. You're gonna click set buy stop. You're gonna I did have to add, before you get into the trade, I would suggest you do it the night before or way before, maybe at 7:30 or before. You have to know what lot size you will be using for the trade. You have to know what lot size you're going to use for the trade, and you have to know what 75% of that lot size is, and I'm going to express that to you later. So you're going to figure out what the entry for that. All of this you have to be able to do in less than 2 minutes. I'm saying it in a little bit of a different order, but it's all the same practice, right? So you're gonna set the buy stop by adding 0.0005 to the entry of the 8 a.m. candle. You're gonna put your lot size, which you should already have in there, and then you're gonna subtract the 0.0015, which is 15 pips. You're gonna have a 15 pip stop loss from the entry price of the not the 8 a.m. candle, but the entry price of the buy stop. You're gonna subtract 15 pips from that, and that's gonna give you your stop loss, and you're gonna enter that into MT5, and then you're gonna take the 80. So we're on the calculator app. Remember, this is what we're doing on the calculator app really quickly. You are going to take the 8 a.m. candle open price, and then you're going to add 0.0025, and that's going to be take profit. You're going to have a 25 pip take profit. You're going to have a 50 pip stop loss. You're going to have Forex Factory, that app on your phone. You're going to have MT5, MT4, whatever trading platform on your phone, and you're going to have the calculator in the same folder. You don't need to be going around and looking for different whatever. You don't need to be going around looking for different apps on different pages. You have to have all those in the same folder or next to each other if you can. Other additional apps that you might want to download. I'm gonna make a video about this, but other apps that you might want to download will be Google Spreadsheets. Not yeah, Google Spreadsheets, so you can have a trading journal to document all your trades and your trading psychology, how you felt and what you were thinking about during the trade. And you also going to want to have a lot size calculator. Forex Factory also has a lot size calculator in the app, but you might want your own or whatever. So I'm gonna reiterate what I was saying. Once we have the 8 a.m. candle open price, you're going to put that into your calculator. You're going to add 0.005, and that's going to give you the buy stop entry. You're going to subtract 0.0015 from the buy stop entry price. That's going to give you your stop loss. You're going to add 0.0025 to your buy stop entry, and that's going to give you your take profit. And then you're going to do the same thing for the sell. You're going to take the 8 a.m. candle open price and subtract 0.0005, and that's going to give you the entry for the buy stop. You're going to subtract 0.0015 from your sell stop entry. And that's going to give you no, my bad, my bad. You're going to add 0.0015 to your sell stop entry. That's going to give you your stop loss, and then you're going to subtract 0.0025 from your sell stop entry. So your sell stop entry, and that's gonna give you your take profit. So basically, you're gonna have a 25 pip take profit with a 15 pip stop loss. Now I'm going to have a step by step detailed document for you guys that's going to show you the mathematical calculations on how to do that and what buttons to press, so on, etc. And I might give you like a little dramatization with an iPhone screen record of me typing it myself for an example, right? So that's it. And then you got to make sure that your lot size is properly set. Let's talk about lot size, which is risk. If you have an account, I'll say this: if you have an account more than $10,000, whether it's a live account or a demo account, $10,000 or more, you want to risk 1 to 3% per trade. You're gonna make money that is gonna be decent in your life, and you're gonna grow your account 1 to 3%. I have an FTMO $200,000 account. I do 1.5%, but 1% to 3% is gonna be fine. You're not gonna build your account with that. Anything from 4% to 15% is still okay, but now you're risking a lot. And professional traders don't do that. Professional traders don't do that, and then you're gonna be in psychological issues. But whatever you're comfortable with, I'm comfortable with 1.5%. Later on, when I get more professional, I'm gonna up the risk or whatever like that, and I'll know what to do. But for me, I do not touch my risk. I only risk 1.5%. And once you get your lot size calculator, and you could calculate what is whatever percent that you're going to use to the account size, and it's going to give you what lot you need to trade. Now, for my over leveragers that want to put some money in the account, you want to make it or break it, blow the account, you could go ahead and risk 40% is the magic number, especially with a 15 pips stop loss with what do you got 50 what you got yeah, what they have like a 50% margin call, 80% stop out rule. 40% seems to be that good number that you could risk per trade. It's going to either build your account very fast or you're going to lose money very fast. And then even though you do get into drawdown, because I have pretty long winning streaks, you'll be able to build the account back up, no problem. All right, so that's good. So that's risk. Let's go over it again one more time. At 8 a.m., you're going to take the 8 a.m. candle open price, which is the main important number that you need to build your trades. You're going to set your buy stop. You're going to set your sell stop 5 pips above and below the 8 a.m. candle open price. You're going to risk properly, and you're going to have a 25 pip take profit with a 15 pip stop loss on both of them. Now, the next thing is, since we have no bias, we don't get on the charts, we don't look at candlesticks, we don't look at chart patterns, we don't look at trend lines, we don't use Fibonacci, and we're not using Elliott wave or whatever people are using. We're letting markets tell us where the price is going to go. That's why you put those buy stops there. If markets move 5 pips up, markets are going to we are going to be in a buy, and we expect price to move higher. If markets move 5 pips down after 8 a.m. candle open, markets are going down, we're going to be in a sell, and we're expecting markets to sell. Based off my strategy, I've noticed that if whatever markets move, whether 5 pips up or 5 pips down, 5 pips bullish or 5 pips bearish, after the AM candle open, it is more likely than not to continue for at least 5 more pips, making a total of 10 pips in that direction. And I've seen it happen multiple over time and time again, and I'm going to show you it happening time and time again. You could go to my live stream and see it happening time and time again, until you are beaten in your head that this is actually a working strategy. This is actually a fact that happens in the markets, until it's not, right? So once market triggers, whether it's your buy stop or your sell stop, you quickly have to delete the opposite order. So if we get into a buy, you want to delete the pending sell order. If we get into a sell, you want to delete the buy order, because if one market go in the drawdown and you did not delete that order, you're going to be in a hedge position. Unless you know where the market's going to go and markets move in that direction a lot, you're going to lose on one of those trades, and you're going to have to make up for it on the winning trade. It is the type of hedging, but it's not conducive. So you really, really, really want to have alerts on the charts. And I'm going to show you guys. I have my own indicator that puts the alerts. Trading View has alerts for you. And I believe MT5 on the computer lets you place alerts. And these alerts are going to be placed on the MagnOpus Trading Grid. That's why it's so perfect and beautiful, because it has everything that you need, from the alerts to the take profits, the stop loss placements, the entries, and everything is all on the grid. And it's all beautiful. Because I made it and I'm beautiful. Let me stop. But so yeah, that's so once we get into whether it's a buy or sell, delete the opposite one, and now we are in the position and we are waiting for price to move another 5 pips in profit, right? So once price moves 5 pips in profit, and it has reached that your first 10 pip line, which is level one, you can call it level one, or you can call it bullish main line, the first bullish main line, or 10 pips in profit, whatever you want. I mean, 10 pips away from the 8 a.m. candle open price, you're gonna close 75% of the position. Like I said, you need to prepare your numbers before you go into the trade before 7:30 a.m. Maybe the night before is a lot better, because you'll know your account size and you have to get these numbers. So you have to know what 75% of the position is. So, for example, if you're trading a one lot and markets have moved in your favor 5 pips, you are going to close 0.75 lots. That's going to leave 0.25 lots, which is 25% of the original position, as your trailing position. This is what you're going to use to catch the rest of the market's moves. Now, I'm going to go on a quick tangent as to why I have this there. I know you guys have been trading. Some of you guys have been trading before. Some of you guys have been watching people trade. Some of you guys have been demo trading, live trading, whatever it may be. And I've been trading up for a while now, for years, many. I'm close to 10 years now, right? So I've noticed that majority of the trades I get into have some type of profit, and I know you guys seen it too. You're waiting for your TP to get hit, but you do have money on the table. You have profit on the table, but you're waiting for the TP to hit, or you're getting greedy and you don't take the money off the table. All of that floating profit is not real unless you close it. So instead of closing everything for not hitting your TP for a partial profit, you close a percentage of your position. And that's the good thing about MT5 and stuff like that. You don't need to close the entire trade. You can close some of the trade and leave the rest of the trade open with the same entry, the same stop loss, so you don't lose your perfect entries in your positioning. And then if markets decide to trail, they will. And I noticed that for the most part, it's not common. It's not more likely than not that markets are going to trail. And it's not more likely than not that markets are not going to fluctuate maybe 10, 15, 20 pips before going back in the direction that you're going to move. So why not take the money off the table and put it in your account? So when the next time you do trade, you can continue trading until you reach that day where it is a big bullish or bearish trade and it has no drawdown and you can lock in profits. But how much does that happen every day? No. What does happen every day on most of your trades is that you're in profit. So I implemented this. It's good for your psychology. It's good for building the account, for leaving buffer room in the account, for you to be more aggressive, for you to be able to take more losses, and so you be able to take withdrawals faster. So that's what I do when markets move 5 pips in my favor. I close 75% in that position, and I leave 25% in that position to trail if markets decide to continue moving in that direction I'm in. But with that trail, because you guys are manually trading, I want you to once you close that 75% of position, I need you to trail your stop loss to that point, 5 pips in profit to that point where you to that price where you close that. That is gonna lock in your break even and profits. Now, the downside to that is that you're not leaving enough space for markets to fluctuate for you to actually trail the position. More often than not, markets are gonna move back 1 pip and stop you out. You get what I'm saying? So don't be upset about it. Don't cry about it. You have money in the bank. You have money in your account. It's better. It's better than having those losses and losses. I don't know how when you're gonna get tired of all those losses, and now you're gonna start putting some profits in you. But in the off times or the rare times market actually decides to shoot off to the moon, you have 25% of position open, and you could go ahead and trail it. And the way that you're gonna trail that after you have brought it up to that 5 pips in profit, every time markets move 10 pips from that point, you're gonna trail the stop loss 10 pips. Every time you move 10 pips from, again, you're gonna trail it. Remember, you're gonna have alerts on every one of the level lines 10 pips above on the grid, so you'll know when markets are moving. Or I suggest that you just watch the charts periodically, so you watch how price action is moving. You are working on your reticular activating system, being able to identify price movements, and you're working on your psychology and your understanding of market movements. So you do that. Me personally, I don't do that. I have a program that trades for me. I built my own program based on this very, very simple strategy, and I use a 5 period ATR on the 5 minute charts. And what that does is it's basically the same type of trail, but it's not always the same number of pips based on the range of the last 5 minute candles. They have the average of those things, and then they will trail my stop loss based on that average range. You could open the ATR and then set it to a 5 period, and you could do it yourself. But I doubt that as a new trader, experienced trader, you want to do that, or you can actually do that. And then me myself, I've noticed that a trail just like you guys are doing, I'm probably gonna have to implement it. It seems a lot better, but mine's have to be time based, and I need to test a few different versions of it to make sure that I have the right inputs, and then I'm gonna go do that. But for now, just trail it 5 pips in profit when you close your 75 pips in profit, and then trail it 10 pips in profit every time markets move 10 pips in your favor. If markets move back 10 pips, let me put this rule in there, which is the golden rule, which is the rule you tattoo on yourself, whether you want to trade like I trade or whatever. Never, ever, ever in your life, with no exceptions and no excuse, move your stop loss backwards. Only move it in profit. Never move it back. If you accidentally move it in profit and it's not where you want to do, you want it, don't move it back. Never, ever move your stop loss backwards. Whether it's a buy or sell, never move your stop loss backwards. Let it hit and be alive for the next trade. It's better you lock in profits or a partial loss than you lose the trade. Never practice that. Well, you might do it one time, you might win it the second time, but over time, you're going to lose money, and you could take that to the bank, or you could take that to the food bank in the poor people house, because that's where you're going to be at after you blow your account. So yeah, just do a version of that. That's fine. For me, I trade every day, Monday through Friday, indiscriminately. Doesn't matter if it's news or no news, whatever like that. Based on just really taking 5 pips in profits, I know you can take 5 pips in profits every day for the markets. Or you could take 15 pips in profits every day in the markets. But markets move a range of about 20 pips a session or 20 pips a day in general. And I've been saying that, spewing that forever. So we trade Monday through Friday. I might change the strategy, like I said, where I don't trade NFP, CPI, PPI, not because of my technical analysis or I won't win trades. I'm doing it because brokers are pieces of shit, and the spreads are usually horrible, where if you do get into a losing trade, you're going to lose more than you actually try to win. Sometimes you win more because of spreads, but majority of times you lose. Or you get triggered into a trade on accident because of spreads, and it's the wrong trade, and then not only are you in the wrong direction, you have big loss. And you'll see from my FTMO account how I and why I learned that lesson. And then the thesis to the strategy is that we have no bias. We don't go on the charts. We don't look at news to figure out whether you're going to buy or sell. We don't go on the charts and do technical analysis to figure out if we're in an uptrend, downtrend, we're going to buy, sell, what candlestick patterns are occurring, whatever. We don't care. We let them, and we do not place trades because we made a decision. We let the markets make the decision for us, and we let the markets move naturally. That's the only thing you can do. You could do whatever you want to do. You could call on God, you could call on ICT and everybody else, but nobody knows where the market is gonna go, and none of you guys or nobody that you know actually control the markets in the market direction. So this strategy is amazing for beginning traders, intermediate traders, experienced traders, investors, and everybody in between. It works by itself. It does work. It always gonna work. It can be adjusted little by little to adjust to current market conditions. And it help your psychology where you're not thinking about none of the other stuff that other people have to think about. You don't have to think if that was a trend line. You don't have to think if that was a bullish engulfer. You don't have to think if you made the right decision where it's a uptrend or a downtrend. No thinking necessary. The market is gonna do what it's gonna do regardless when we're only trading the probabilities, a probability that it's going to do one thing other than the opposed to the other. And that's a 25-minute rant on the strategy by itself. So very important. Take a screenshot if you want to, and you could take it to the bank. All right, now let's get to the fun part. This is what you're looking at right here. This is my chart. This is not my teaching chart. This is my chart. And this is price action from today. This is actually today, July 23rd, Wednesday. And this is the completed day 3, 63 pips in range. Session 1 was 29 pips. Session 2 was 64 pips. And I'm going to explain to you based off all the knowledge that we learned over time what we're looking at over here. So as you know, this is gonna be our start line. This is where we're gonna start trading, and this is where we're gonna start building the MagnOpus trading grid. Before all of 1, 2, 3, 4, before all of the price action has developed, we only had this area right here. We had the 8 a.m. candle open price. We knew where our buy stop was gonna be. We know where our sell stop was gonna be. We know where our first level bullish was gonna be, and we know where our first level bearish was gonna be. We built that, and then we made a box for 1 hour, which is majority of my trades last the hour. So everything that is going to happen usually happens within this range, and I just like to highlight the range, and I color the boxes. So if the outline of the box is red, that mean we lost the trade. If the outline of color of this box is green, that means we won the trade. If the inside shade of this box is red, that means that the sell stop was triggered. If the inside of this box is green, that means the buy stop was triggered. And that's the definition of it. It's about 1 hour long from 8 a.m. all the way to 9 a.m. It should be 9:40. It should be 8:45 actually. It should be or 8:55. Yeah, 8:55 connects to 8 a.m. I mean to 9 a.m. So yeah. And it encompasses the data that happens. As you can see, today was Wednesday. We had no news. We're in summer. It was not a lot of liquidity happening. So we ended up closing the trade maybe like 9:05 or whatever. But the duration was still less than an hour. We waited for more than an hour, but we didn't get into the trade until like what? We didn't get into the trade until 8:15. All right, so let's explain to you based off what I showed you guys on how to read price action in MagnOpus trading grid. So first things first, we start over here. We markets open at 1.17257. We move bullish 5 pips, and we put our black dot here to represent that our buy stop was triggered. We move bullish 5 pips. Let me take this off. It was an accident. I shouldn't have put that there. We moved by bullish 5 pips. Then we went to draw down 5 pips back to the 8 a.m. candle entry. Then we moved back down to where the sell stop was supposed to be. We delete the sell stop. Now we're in 10 pips drawdown. We went back up a little bit. We're fluctuating around this range for a few minutes. And then we ultimately ended up hitting the first bearish level 1 here, 10 pips below the 8 a.m. candle open, which is also, if this is 5 pips above, so we got 5 pips here, 5 pips again, 5 pips again, makes 15 pips. Our stop loss is 15 pips. That means that we are out of the trade for a loss. And since the box is shaded green, it was supposed to be a buy. And look what happened. Markets went back up to the 8 a.m. candle open. Price back down to the bullish level one, negative level one. That it may be trading maybe 2 to 3 pips below it. It's not 5 pips or 10 pips, so we didn't have another bullish level two line or another line bearish to the downside. And it went back up again. So as you can see, -10 +10, -10 +10. This is negative average. It's not moving anywhere. It's consolidating. It's net zero. Back at the 8 a.m. candle open. We open here, moved, fluctuate, came back, went back down, came back, and we're still at 8 a.m. candle open range right here. Now, after stopping us out, price decides to move another 10 pips. Now we're on the bullish level one, 10 pips above 8 a.m. candle open price. We tried to move a little bit higher, and we went back down 10 pips. Maybe it's including the entire range here, a little bit more than 10 pips, but we're not worried about anything less than these strikes right here. That's the retest strike. Then we went back up bullish 10 pips. Now we starting to rally. And don't you remember? We were in a buy. Marcus signaled that it was going to continue higher, but based off of my range of my trade, I only had a 15 pip range and it moved maybe like 18 pips, 18, 19 pips. We were off the trade, and then it ended up being a beautiful bullish trade for, if we started here, 10, 20, 30, 39 pips. No. 35, because he still got 5 pips here. 5, then 15, 25, 35. Yeah, around that. Around 30, around like, damn, 45. My math is not the best, right? Especially because I'm talking too fast. And that's what happened, guys. We ended up, this ended up being a losing day. And nothing that we could do about that, right? Let's go to yesterday's trade. Using the same exact information, we start at 8 a.m. right over here. My lines might be off a little bit, is because I have a curve mount. I have a big curve monitor, and then I have my laptop monitor and stuff like that. And when I record on my laptop monitor because it's a better resolution, especially with TikTok and all those smaller ones. And then when I drag my window, my Google Chrome window over here, it the resolutions are too different, so it has to reproportionate it and stuff like that, and it always fucks up. It fucks up my boxes and the times, and it fucks up my lines. But you guys can get the gist, right? Because when I'm really doing my own analysis on my own time, I use the big screen because it shows more data. Okay, without that ranting, price started at. Let me use this one. Price starts at 8 a.m. We move down bearish 5 pips. That's triggering our sell stop. And then we move another 5 pips down. This is going to trigger our 75% close of our position. Now we're in profit. As you can see, the outline is green. We have made money for the day. We have a 25 pip trail of following price. As you can see, price fluctuate a little bit before going down another 10 pips, reaching the second level, bearish level line. Um, but this little fluctuation, my ATR stop loss probably got out the trade around here. So I did have the 75%, and then I closed from a little bit more profit. I can tell you how much it was, or if you watch my live stream from yesterday, you'll be able to see the exact amount. And then it moved down another 10 pips before it rallies back to the upside. And how many pips did it rally? We could go ahead and count our lines. How many lines we have from over here? So we don't count down here. This is this trade is already done, and we moved. I could say a total of, well, you got 10 pips in total. I mean 20 pips in total to the downside, but in terms of my trade, 15 pips, which is a 1-to-1. But since I have a trading position and I close at 5 pips profit, I didn't close a 1-to-1. I closed a 0.3-to-1, which is a negative risk reward, which is fine because I'm gonna close these trades over and over more than you could close a 1-to-1. Oh, and then let's go ahead and talk about it. It went up some. It went back up 10 pips after, and it went up another 10 pips. Now we're back at 8 a.m. kind of open. It retested back down 10 pips before retesting back to 8 a.m. kind of open. Remember, guys, you see patterns happening again? Up, down, consolidation, holding price. The only thing that is moving now is time. It's holding price over time. holding this range right here. That's not giving too much profit. And then we move 10, 20, 30, 40, 50 pips to the upside before consolidating right here again without hitting either this line or that line. We almost tried to until the end of the day, and that day is over, right? So that day was a winning trade day. Let's go ahead and go to Monday, which is day 1 of the week over here. Zoom in a little bit for you guys to explain. Get my marker. So what we did was we moved bullish, indicating that we are bullish for the day and that it should, I should not say should, but it's more likely than not to move another 5 pips. We ended up, I don't need this dot right here. I did that on accident. We ended up, what actually happened is we ended up going down 5 pips back to the 8 a.m. candle open, going down another 5 pips to where the sell stop was supposed to be, but we deleted it already. And then actually hitting the first bearish main line for at negative 15 pips. So if we're starting from our open price for the buy stop, 5 pips, 10 pips, 15 pips, which is actually 10 pips from the 88 candle open, which makes that a losing trade. Now this looks almost identical to what happened the other day, but we didn't go anywhere lower than that. So actually hit on the FT mode, it hit for a loss. On blueberry markets, it didn't hit for a loss. We actually got a profit. We almost got stopped out by maybe 0.3 of a pip because of spreads. We didn't get stopped out because of spreads. The FTMO we got stopped out, and then on IC markets we got stopped out. So different brokers give you different pips, even though your technical analysis might be right. It depends on the broker. It's going to depend on the outcome of the strategy in your system, any system. And then we ended up going, starting from that point, from our stop out, we ended up going back to 8 a.m. candle open price, 10 pips bullish, moved another 10 pips bullish, bullish for let's starting at 8 a.m. candle open, 10, 20, 30, 40, 50 pips once again. And we missed that trade by a partial pip. On the blueberry markets, we actually got stopped out for a partial position over here because we have a tight, the coochie tight trailing stop, and so we wasn't able to monopolize on it, but it was a win trade nonetheless. After we went 5 pip bullish past that 8 a.m. candle open price, we went back down. That's that retest, reset, and then we actually reversal. So the blue dot means okay, either markets took a break to pause, or it's signaling that we're gonna reverse. As you can see, this one signal is reverse, that one signal is gonna reverse. And look at the pattern there, right? We moved down 10 pips, fluctuate a little bit, moved down another 10 pips before doing bullshit, holding this range right here of 10 pips until the close of the session. All right, now let's go to last week Friday. Over here, let's zoom in. Do it again. So we had the 8 a.m. candle open price was right here. Markets went boom, bullish, no drawdown. Those are my favorite days. I'm gonna try to study a lot more of them as well. We did no drawdown, which means that we're moving bullish with a lot of momentum, and that means that it's more likely or not we're gonna move another 5 pips, which we did quickly. And we have our partial close of 75% of the position, and we have our 25% trailing stop. Since markets moved back down quickly, 10 pips back to the 8 a.m. candle open, you already know my ATR trading stop got stopped out, and we have our profits for the day. As you can see, from the outline of the box, green mean we had a winning trade. The shade mean green mean we had a bullish position. It hit our buy stop, but since our ATR is tight, we didn't get this one-to-one up here where markets move bullish again. Bounce. Is that double bounce that I was telling you that we've seen over and over again? That's a pattern. And then we act this bounce right. This reset right here actually was the real confirmation of a reversal. We reversed down another 10 pips. We came back up to retest that again, and that lets us drop down another 10, 20, 30 some pips before what markets do around this time of hour. Oh, yo. You wanna let me be great? Let's do consolidate to the end of the day. As you guys can see, move. You got as you guys can see, move, rally, consolidation, impulse, whatever ICT and then be talking about. I don't care really. I will incorporate it later, but I have to master this just data. I have to master these numbers first before I go listening and studying anybody else's work. Okay, let's do it again, guys. Come on, let's do it again. I'm gonna show you it's not a fluke, right? 8 a.m. candle open right here. We moved bullish, no drawdown, guys. Remember, look at that. This is an indicator, no drawdown. That means that we're more than high. The odds are very high now of us moving another 5 pips. We moved another 5 pips. We closed 75% in position. We have our ATR trailing stop. In this case, markets quickly dropped down again. That means that our trading stop got stopped out in profit up here. We're back at the 8 a.m. candle open price, and then we wick down um, to the first bearish level right here before wicking back up. I believe this is news or something like that, because around 8:30 is when all that news should be happening. You can check it yourself, July 17th. I'm not gonna check it. I can, but I'm not. And then we move another 10 pip bullish. You move back down to reset or retest, fluctuated a little bit. And then we went back up to it and then back down. Do you guys see it? This is a more elongated version of the same thing we already seen. Move forward, reset, move forward again, reset again. This is the second one, but we actually did a third one. That means that we had, and as you can see, session 2 is only 48 pips in range. I mean, we just having we're not having a big day. It's just moving sideways, wasting time. You see, we just wasting time in this range, and then we that's the end of the session. Let's do another one, guys. Let's do another one. Let's do another one. Let's do another one. All right, all right, all right. Oh, this is a nice one. This is gonna be a nice one. Let's make sure I have as much data as possible in here. Stretch it out. And these are the days that it's a pain in the butt. It's a pain in the butt to go ahead and draw to put all those dots on a chart. So remember, guys, the first thing I want you to remember is this is the same time frame. This is the same 9-hour range or 12-hour session. But look how many pips compared to the other days that we had. Pips on pips on pips. All right. And let's go ahead and explain what happened this day in terms of price action. All right, guys. So what happened that day was that markets started over here, little to no drawdown. We went down 5 pips, triggering our sell stop, indicating that we're going to move lower. We actually did move lower, so we closed 50%, 75% in position over here. And what they did again, sharp move back to the 8 a.m. candle open price. We have our ATR to save us from losing any money and locking in locking in those minimal profits. Right there at the 5 pips. I got this swirly line right here, means that either touched the line or didn't touch the line depending on the broker. When markets get like maybe 1 pip or less than 1 pip, especially on trading view, it's hard to put for me to put a strike or a dot on that line because it depends on the broker. So I put the little swirly one to just indicate, all right, it might have depended. So it did move 9 pips, at least 9 pips bullish, above the 8 a.m. open price right here, and then we ended up going back down. Since I didn't put a dot there, I didn't put a reset or another dot on the 8 a.m. candle price, but we actually did an official move onto a real level, which is negative level 1, right over here. So yeah, based on if you had, I'm not even gonna say that, forget it. Based on your broker, I'm gonna say it anyway. Based on your broker, you probably would still be in this trade, if you didn't have a trading stop. So yeah. We moved down 10 pips and down another 10 pips. So we are total from the 8 a.m. candle open price 10, 20, 30, 40 pips. 1, 2, 3, 4 dots. Each dot represents 10, 40 pips to the downside, guys. Before we come back up to retest. This thing is in my way. All right. excuse me for burping out here. Before we go back up to retest or reset, we came kind of down here. It depends on your broker. This is one of those one pip moves. We ended up resetting over here again, and then we started that bullish rally. Boom, boom, boom. Reset. Boom, 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 boom. Boom, 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 boom. Reset. Boom, 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 boom. These are that moves. We wouldn't be able to get that move. The drawdown on that one is a little bit too unrealistic. Unless you knew that move was gonna happen, or unless you started your trade somewhere around here, this zone right here, or this time frame right here, you're not catching that move. And there was no news. They had news. I think it was news around 8:30, but it actually or Fed Power or somebody spoke or whatever, and then it rallied up to the upside, and then we reset. That was and then we confirmed the reversal, and then we rallied back down to the downside. Reset, confirm the reversal, small rally to the upside. Reset, confirm the reversal, false reversal. To just bullshit around this area. Go back up 10 pips. And you know what usually happens around this area. But since the range is pretty big, we're gonna have some resets, a small rally, reset, and then more bullshit. But the entire move happened over there. Do you guys want another one? We have 45 minutes. I'm gonna finish this week, and then I'm gonna let you guys go ahead and try to do this yourself on your own time. But I know your eyes are seeing exactly what I'm seeing. I'm not pulling up random data. You know how these other traders will go and like they'll do technical analysis for you and they're like, hey, look at this trade. Hey, look at no, 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 no. I'm gonna go from current surpass day by day. I'm not skipping days. I'm not cherry picking. I'm not trying to find where the strategy worked and where it didn't work. I'm showing you real life, real time data. And you could go back on my live stream and see me taking those trades exactly the way that I said it. And yeah, let me not rant too much. You're gonna hear a lot of ranting from me. All right, guys. So this is another one. I'm gonna reset my chart because I think from the other day I done skewed it so it don't look as good. All right, let's go do this one. You remember I got all of this. We could do this. We could do this all day for real. We could have 10 hours of this. It's the same thing happening over and over again. That's backtest for you. Backtest analysis for you. Not that little MT5 data backtest. This is the real spiel. And it's an explanation with that backtest. It ain't just, oh, when we long we won. No, 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 no. Let's explain it. Let's break it down. And let's break it down the same exact way for every single day. All right, guys. It's not gonna get no better. All right, so we started over here. Actually, we have no drawdown to this side. We do hit the sell stop, which is 5 pips below the 8 AM candle open. We came back to the entry. I'm gonna leave that, but it shouldn't be there. Came back to the entry. And then we hit stop loss quickly to do 10 more pips to the upside, only to reverse back down to the 8 AM candle open price to go back up. Now we have some form of consolidation, a false move here. That's what it is. A bullish move to the upside and bullish move back down to the same area where it just came from. That's manipulation. Doesn't matter to me, but it was news as well, I believe. What time is it? Around the same 8:30 time zone, guys. These are things that happen over and over again. These are things that you want to put in your notes. You want to analyze them over time, and you want to see how can I make profit from this, or how can I stop losing money from this. And then when it does happen again, which it will happen again because markets are cyclical in nature, they repeat the same thing over and over again. Just like you and human beings, you will be prepared. Then you go bloop 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 down, and then we melt down, do a little retest, and we continue to melt down. We continue to melt down. Continue to melt down, continue to melt down. We do a small retest. Since we didn't touch this level, we'll just consolidate around this level. This will be the first retest. Then we go back down. Now we are still consolidating. And then down another 10 pips. And then you know what you know the routine when we get around 12:30. You know the routine. Did it do anything special? Did it do anything special? Nope, not at all. That's why you have to pick the times that you're going to trade. You just can't go ahead and trade at any time. You gotta pick your time. Let's see how much pips did it move to the downside from the 8 a.m. candle. I mean, from the 8 a.m. candle open 10, 20, 30, 40, 50, 60, 70 pips to the down, maybe 77 pips to the downside. But we had, it did go 20 pips to the upside. We only can withstand about 10 pips from the 8 a.m. candle open, but 15 pips from your entry price of the sell stop. So based on the range of our entry to stop loss, we wasn't able to experience that trade, and that's fine. That's fine because this is summertime. When we get out of summer, bro, you're gonna see a lot structured markets, a lot more volatile moving. When these markets move, they don't move like down quick, like trying to manipulate you and get people out the market. It's more like you have a nice bearish engulfing and then just bullish candle to the downside. Not yeah, and then the move happens. No, that's just clear manipulation. All right, we got the 8 a.m. candle open. We move to the downside, triggering 5 pips low in our sell stop. We do wiggle around a little bit, and we actually, as you can see, this one we actually left the hour. So we've been watching markets for a little bit more than an hour, but since we opened the trade at 8:30 and we have our first partial close at 9:05 ish, we actually were in the trade for 30 minutes, but we were watching markets for over an hour. So those are two different time frames. Even though I have that candle, I mean that box that measures 1 hour, doesn't mean that the trade doesn't mean that the trade just because the trade it trades outside of the box doesn't mean that the trade wasn't 1 hour. We was watching markets for 1 hour, but it sometimes it does trade within the hour. So we actually have our first. Let me get that out your way. Now, as you can see, we have our partial close of 75% of the position. You know, since our ATR is tight like a baby, since we went back down a little bit over here. We are we are taking out the position for a profit as well, and that's the trade for the day. And then we watch markets go back up 10 pips, back down 10 pips, back up 10 pips. That's the thing. Don't you remember, guys? It's a pattern, back down, and then we drop down 10, almost another 20 pips to the downside, which is from the 8 a.m. candle open 10, 20, 30 pips in total. And then once we get around 12 o'clock, you know what time it is BS time. Now, you guys can go ahead. You know how to draw the MagnOpus template. You know how to draw the MagnOpus trading grid. You know the strategy and how the strategy works. You can go ahead and try this on past price on Euro USD. I can show you guys in another video, a later video when I start using the same concept on gold and US 30 because I see that's a big request. But I promised myself that when I become a professional trader, a consistently profitable trader, I'm gonna do it on Euro USD. I'm gonna make Euro USD my BICTX. You know how to spell the word. Before I move on to anything. Once I master USD, I know I can master the world. I'm not worried about all the profits that you can make on gold or all the profits you can make on US 30, a NASDAQ, or all the other stuff that you guys are worried about. I want to say I came what you guys said that you couldn't trade, what you guys said I was most manipulated, what you guys say that you want to avoid, what you guys say is the hardest is the one that I made my baby. And then if I can do that with the hardest of what people are afraid to trade, then I'll walk all the other ones. So that's a proof of expertise. I'm not in this for just money. I'm in this for expertise, recognition, notoriety. I want to do something. I don't just want to make everybody make money. A lot of you see a lot of these dweebs in. That's a rant for another day. Thank you guys for watching the video. If you have any questions, go ahead and ask the questions. DM me, follow me on TikTok, subscribe, like, do something, bro. It's free information. It's free game. But if you don't, I'm not gonna be like one of those guys that try to guilt trip you into supporting because I watch a lot of videos that I don't like, I don't subscribe, and they do probably change my life and make my life better, and I didn't support. So I can't be a hypocrite if you guys don't do the same. All right. But if it did help you, I'm happy. Shoot. All right. Thank you. Please say